Welcome to the Accounting Working Group podcast for February of 2021. I'm your host, Dr. Stein Smith, and I'm also the chair of the Accounting Working Group. And so I am pumped to have back on the podcast with us this month, Joey Ryan, CFO of Gilded. And I'm going to toss it to Joey now for a brief introduction of him and all of the excellent work that he and the team over at Gilded are currently doing.
Yeah, thanks, Dr. Sean, and glad to be back on. I know it's been probably over a year since we first did one of these initial podcasts, so good to be back on, especially with all the developments in the space that's occurred over the last year or so. And yeah, for those who don't know me, I'm Joey. I'm the CFO and co-founder at Gilded Finance, and we are enabling businesses to simplify blockchain and cryptocurrency payments and accounting, and integrate payments, digital asset payment and accounting into their back office systems.
Awesome stuff. And sort of echoing on that earlier point, Joey, there has been quite a bit going on lately, right? I know as of this recording, Bitcoin just broke 51,000 earlier during the morning. And so obviously with all of that, right, there has been increased institutional interest anyway, be it from BNY Mellon, Tesla, and all kinds of other firms out there. But honestly, right, on a operational basis, what are some of the issues that are still facing companies that are trying to hold crypto, pay employees, pay suppliers in crypto, and then actually get paid in it also?
Yeah, great question. I'll go into plenty of detail here. So first of all,
awesome.
For the audience out there, I am a CPA, so I do come at this with a CPA background. I've worked in audit at the Big Four at large accounting firms in the past prior to co-founding Gilded. So I come at this with an audit perspective and a perspective of small businesses, medium-sized businesses, as well as public companies, kind of treasury management and payment. So what you're seeing now is obviously we've seen kind of the tipping point where these large public companies are understanding that Bitcoin is a fantastic inflation hedge. So you're seeing these large businesses that have huge treasuries or huge amounts of cash on their balance sheet, basically diving into Bitcoin, adding Bitcoin on their balance sheet and leveraging against the US dollar, right? As we've seen over the last year, and what's expected to continue with the new administration with Janet Yellen at the helm is the continued kind of money printer pumping out dollars into the economy, right? So with that, obviously that's going to have an impact on inflation going forward, and you're seeing that playing out with Bitcoin being the deflationary asset that it is, and it thrives in times of inflation, right?
And so anybody
that kind of
to sort of peel that back a little bit, Joey. I've heard some individual folks out there who are not Bitcoin advocates, who are not crypto advocates, arguing the exact opposite of that, though, right? That during February and March of 2020, when the equity markets dropped 30%, 40%, Bitcoin and other cryptocurrencies dropped also by an equal, if not larger percentage. And that really this whole current bull run is honestly mirroring equities. So prior to diving into some of the actual payment issues, if you were having a conversation with a crypto skeptic, what would you say back to that?
Yeah, so I think what we saw when the pandemic first hit was everybody pulled their money out of everywhere. Everybody was scared of kind of, if you want to call it Armageddon or end of the universe type stuff. This is something that certainly our generation and a prior generation has never experienced before. So
Sure.
Everybody, I'd say at the time that this occurred, everybody pulled their money basically out of any sort of investment portfolio to have cash on hand in terms of a end of the world type scenario. Is again my opinion as to why kind of the equity markets and Bitcoin and cryptocurrency markets kind of dropped at the same time, right? And then I think as we've we've gone through. It's been a year, a little over a year now since this started, with the money kind of being pumped back into the economy. Now everybody has additional dollars to invest. So I think you're seeing obviously that taking off, and you will see it taking off going over the next 4 years. Now, I, I'm not against equities, right? Just because, and sometimes
Sure.
people see crypto people and say, "Oh, you're against equities." It's like, no, I support capitalism and I support the American economy, and I have nothing against stocks or equities or anything in the equity market.
Hmm.
Crypto is different, just a different beast, and we're seeing it grow at outpace. You're seeing Bitcoin outpace. It's outpaced the S&P 500. It's outpaced the equity market over the last 10 years. Not tenfold, but at a much higher percentage. So skeptics are going to be skeptics one way or the
Hmm.
other, but going on what's happened over the last 5 or 10 years, you're seeing the crypto markets really evolve now, and especially again going in as businesses are now adopting
Hmm.
Bitcoin as this kind of, if you want to call it inflation hedge, or as kind of the ones that have done the research are seeing that Bitcoin has outperformed the investment market, the equity market, over the last 5 and 10 years, by substantial amounts. So they're taking the risk that they believe that Bitcoin is going to continue outperforming the other
Hmm.
markets out there, and continue increasing in this kind of inflationary time.
Hmm. Yeah. No, and uh, I would agree with that for the most part, Joey. And I do also think that there is a fundamental sort of misunderstanding among some of the crypto skeptics out there as to what the appeal of Bitcoin and other crypto is, right? But now, if we pivot back to actually crypto being used, right, as opposed to being held as a investment or as a allocation of certain capital, and we try to focus on, okay, fine, how do we actually use it as a currency alternative? um, what are some of the obstacles and headwinds, right, from an operational sort of brass tax basis that you and the team have been trying to deal with?
Yeah, so the two-part answer here. So in terms of where I see kind of the use case going in the near term, the next, if you want to say 3 to 6 months,
Hmm.
everybody right now really wants to receive Bitcoin, obviously, right? Everybody wants
Yeah.
Bitcoin so that their investment goes up, right? So you're going to start seeing, I believe what you're going to start seeing is, as businesses or other kind of large institutions start adopting Bitcoin either as an investment or inflation hedge and putting it on their balance sheets, you're going to see employees of those companies wanting to now get paid a portion of their salary in Bitcoin, right?
Hmm.
Not everybody has, $10,000 laying around that they can just go ahead and throw into Bitcoin right now.
Sure.
As we know, a substantial portion of the U.S. economy doesn't even have less than 3 months in savings. We found that out at the beginning of the pandemic, right? So everybody, going forward, everybody wants to receive Bitcoin, and if it's employees or workers at their primary job, similar to allocating a portion into a savings account that you set up, or allocating a portion into your retirement, you'll see employees wanting to allocate a portion into Bitcoin because they see that the value of basically allocating into that asset has tremendous value for them as an investment. So I
Hmm.
think you're going to see a lot of these businesses. There's going to be a demand for them to basically have, if you want to call it, a Bitcoin payroll system set up, as employees are going to want to receive Bitcoin going forward. So I think that's where you're going to see kind of a big use case adoption coming in the next 3 to 6 months. Now, the hurdles to basically being able to enable, if you want to call it, Bitcoin and crypto payments and crypto accounting. So there's still a lot right now. So
Hmm. Sure.
in this,
Absolutely.
yep, in the space, the current accounting infrastructure, back office infrastructure systems, so the QuickBooks, the Zeros for small and medium sized businesses, and then the enterprise solutions of NetSuite and Intact, they currently don't support Bitcoin or cryptocurrency in their actual accounting systems in terms of payment reconciliation and GL recording, right? So that's where Gilded really comes into play. Is we're that layer on top that enables businesses to seamlessly integrate crypto payments as well as crypto invoicing. So the invoicing process as well as the bill pay and AP process, integrating that process into your existing accounting systems. So we handle
Hmm.
the crypto piece of payment and invoicing, and then being able to take that those cryptocurrency transactions and seamlessly integrate them into your existing accounting system.
Hmm. And so you actually raised a very interesting point there. Um, in as much, is Bitcoin ultimately going to be the cryptocurrency used as a currency, right? Because right now we have a lot of large uh, institutional buying. And to your point, there are employees and individuals now and in the future who are going to want to add Bitcoin to their IRAs, 401ks, other types of wealth products. And so as all of these Bitcoins are basically pulled off the market, you know, is it going to be able to be used as a transactional currency, or is there a opportunity for almost a bifurcation to happen out there, right? Between Bitcoin as the biggest, baddest, basically crypto investment option out there as a individual crypto, and then other types of cryptocurrencies to be used more as a way uh, of doing business on a everyday basis.
Yeah, good question. So I'd say right now, again, you're seeing people demanding, wanting to be paid in Bitcoin. You're going to see
Hmm.
that demand. We're at the initial kind of upward swing of that demand. You're going to see that
Sure.
demand hit peak here in the next 3, 6 months, year, et cetera. But yeah, great point. In terms of businesses actually transacting, kind of getting off of the traditional banking rails, like yes, that piece is a separate. The separate discussion on that is as we transition from this, if you want to call it the traditional world of banking, the traditional the traditional payment rails, and transition over to these blockchain payment rails, that in itself is going to be it's a slightly longer time horizon for payments, but I think you're seeing that coming a lot quicker now. The coronavirus has sped that up. This whole kind of digital mindset has sped that up, where businesses are realizing that, hey, if I can start transacting or going quote unquote bankless, right?
Hmm.
Basically cutting out banks altogether, setting up your own crypto wallet, setting up your own back office kind of crypto accounting and crypto payment system. If I can go bankless, I can save hundreds of thousands of dollars on bank fees, wire fees, et cetera, and utilizing these new blockchain payment rails that are faster, cheaper, and 100% transparent compared to the old banking system. So I've always equated it to going from the horse to the car. So as businesses are still using kind of horse and buggy, and the car is out there, right? We're still developing the right infrastructure for this. So we're still paving the roads to make it easier for cars to drive. We're still building more roads, right? In that
Hmm.
in that analogy. So that's what's going on in the crypto space. Over the last 2 years, we've been building roads, starting to build some highways, et cetera. And now you're seeing people that have cars, going on these highways, whizzing by the people on the horses, and now these people on the horses are saying, "Oh, maybe I should get one of those cars," right? So I think that's where you're starting to see this going, and you're going to see not just individuals but businesses kind of adopting this entire kind of back office blockchain payment structure as they see not only the ease of use as the applications are going to be built out to make it super simple for businesses to transact and do business globally utilizing blockchain payment rails, but also the automation that occurs. So by utilizing cryptocurrency for payments, you're
Hmm.
actually able to automate a lot of your accounting, payment, and bill pay process. So you're able to kind of reconcile and match payments to invoices automatically because these transactions are occurring on the blockchain. you can reconcile automatically and then automatically sync those transactions kind of into your GL system. So it actually automates a lot of the, if you want to call it the payment and AR, payment and receivable process flow. Again, saving time, saving money, et cetera.
So, and to your earlier comment there, I would assume that a few of those cars that are currently whizzing down the highway are going to be Teslas, right?
Yeah, exactly.
And
Tesla Model 3s.
yeah, absolutely. And so to sort of start to wrap up our conversation here today, Joey, in terms of crypto accounting, what's the deal with that, and what would you do in a perfect world to have the actual bookkeeping, accounting, and uh, reporting for Bitcoin and other crypto assets be more transparent, traceable, and just more reflective of the economic realities?
Yeah, great question. So, as hopefully we're all aware that's listening to this, I'm sure if you're listening to this, you're aware of kind of the tax treatment of crypto, as that's the hot topic for individuals. But yeah, so for businesses, for GAAP reporting purposes, the current guidance that's out there for non-industry specific guidance is, as most of us accountants are aware, is that it's recorded as intangible asset, subject to impairment, right? And that's kind of been the initial guidance from the beginning. But as we've seen this crypto space evolve in the last 3 to 5 years or so, obviously this is an entirely new asset class. This is an entirely new object that's been formed, right? So the existing
Mhm.
framework for GAAP accounting that's out there is based on, asset classes that are already out there. So with this new asset class, people are trying to seemingly, I call it the square peg round hole, trying to take this new crypto asset class as a square peg and fit it into a round hole. They're trying to fit it into the existing framework that's already out there, and that doesn't work because the framework was not built to support this new asset class. So what we
Mhm.
need to do is we need to adapt the framework around this new asset class. The easiest way I see this occurring is basically having a standards body, whether it's FASB, AICPA, et cetera, whoever. Somebody out there has to first identify the characteristics of every single kind of token that a business could have, that's out there that a business could have on their balance sheet or be transacting in, et cetera. And based on the identifiable characteristics of that token, then they say, okay, this token is classified or qualifies as an investment token. So it goes under kind of the investment accounting framework, or this token qualifies as a tangible asset. So it goes under the intangible asset framework, or this token falls under the kind of cash legal tender framework. So I think that's kind of a first step towards at least being able to properly account for, if you want to say like subject or form over matter, or substance over form,
Mhm.
in saying that, okay, you have all these different types of cryptos, but each crypto obviously can be used or has a different meaning or balance sheet meaning to it. So I
Mhm.
think at least solving that initial part by giving it specific identifying characteristics to each token and saying, based on these characteristics, it should be classified as X, Y, and Z. That's a good start. However, I do see on the flip side too, where businesses can be using tokens differently, right? Like some businesses may invest in Ethereum tokens, while other businesses may be using Ethereum tokens for staking to generate, so it could be a different model where you have to look at it on a business by business use case and say, okay, how is this business utilizing, what is the purpose or what's the substance of what this business is utilizing this token for? And then based on what their identified approach to how they're using this token or what they mean by investing or having this token on their balance sheet, then we record it kind of based on management's interpretation and assumptions as to why, what they're using that token for. So I see it both ways, but something like
Mhm.
that has to kind of come out eventually to start to demuddy the waters here.
No, and I would argue that honestly, right now, the blockchain crypto tax and accounting conversation is a textbook example of how the private sector and how new ideas and applications can outpace the actual policies that are put out to the marketplace. And so obviously there is quite a bit going on out there. There have been some great strides forward, and there are still quite a few open items out there. Joey, thank you so much for joining us on the Accounting Working Group podcast for this month.
Thanks, Dr. Sean. Thanks for having me. And yeah, thanks.
All right, Joey, thank you.